Hello, everyone, and welcome to an exciting journey with Yes Securities. Imagine a world where financial decisions are not daunting but empowering. That's what we stand for at Yes Securities, making finance accessible to all, regardless of background or experience. We are not just about transactions, we are about transformation. With a decade long commitment, we have evolved from transactional broker to a trusted advisor for both retail and institutional client. But what sets us apart? It's our commitment to providing quality financial advice backed by comprehensive research and disciplined investment process. Inspiration from the very essence of greenery, the pigment that fuels plant growth through photosynthesis. In the same way, our research and stock picking strategies breathe life into client portfolio, providing the oxygen they need to thrive in ever-changing investment landscape. Today, I'm delighted to introduce you our esteemed speaker, Mr. Ravindra Bhandari, who brings over 15 years of experience in the financial industry. With expertise spanning investment banking, corporate investors relations, Ravindra's insights are both profound and practical. Armed with an MBA in finance, along with prestigious certifications such as CFA and FRM, Ravindra's knowledge is invaluable. Today, he joins us to discuss the most crucial topic of how the budget impacts market. He will help us demystify the budget's influence on market dynamics in a clear and accessible manner, guiding us towards informed financial decision. Let's warmly welcome Mr. Ravindra as we embark on this journey.
Thanks a lot. I hope my voice is audible and I'm clearly visible on the screen.
Yes.
Okay, okay. So let me begin it with saying that uh, this budget, as everyone knows, this is an interim budget. This was a vote on account kind of budget. The full-fledged budget will come in the month of July. Uh, some of the apprehension what market people had, that since this would be one of the last budget before we go to the general election, there can be some indication of any kind of populist measure, or there may be some announcement of any kind of populist measure. We should give credence to the government that they didn't succumb to any kind of temptation to bring more voters by announcement of any kind of populist measure. What else? What we found is by not announcing any kind of populist measure, this government is also showing some kind of show of strength that yes, we are there and we will come back to power and we will present a full-fledged budget in the month of July. That kind of feedback goes very well for the capital market because as they see this as a continuation of the policy which this government has embarked for last few years. Uh, one thing which it was mentioned in a few lines during the budget, but very crucial for people like us is that they are saying that for next year they are not seeing any kind of tinkering on the direct taxes side. So that part they have said a line. We will see the final print when it comes to July, but it might be happen that we will not see any kind of tinkering on taxes, which is again very good for the capital market. The context of the budget was set by our finance minister in a way that they use an acronym GYAN, which is Garib, Yuva, Annadata, and Nari. What they are trying to talk about is for the poor people. They were talking about how the direct benefits are reaching to the bank account of poor people. On Yuva, they were talking about what kind of Skill India initiative have been taken, how more than 1.5 crore people have been benefited because of these schemes. On Annadata, they are talking about crop protection and better yield, better kind of seed for the farmer, which brings in better yield and better realization. on Nari side, they were talking about Mudra loan, which is given for the female people, and then some healthcare benefits which has been offered. So this was the context at which the budget speech was set. Since this is, again, I say this is vote on account interim budget, there were very few limited items which was highlighted, and which we will talk about as we progress in this discussion. The most important thing which was mentioned during budget was the capex plan, which has been increased by 11.1% for FY25. So the capex plan for FY24 was about 10 lakh crore, and it has been increased to 11.1 lakh crore. If I see on a YOY increase, it's 11%. But the revised budget which has came for FY24, it is 9.5. So on that basis, it is about 16-17% increase. We should also not forget that FY23 was announced when we have a 50% increase on capex plan. This government has put lot of emphasis on capex, building road infrastructure, hardcore infrastructure, which creates the capacities and capabilities of a country to grow for a longer period of time frame. So and when we happen to see last year, since the context of the texture of capex is very important, it gives a reflection on the bond yield. Say this time the capex was increased by 11%, but the background of this increase is more and more money is diverted towards building infrastructure, and nothing on a revenue expenditure where the high increase has been granted. And that we have seen as a reflection that immediately after announcement of budget, I remember it correctly, the budget speech ended somewhere around 12 o'clock, and immediately within half an hour there was some relief on the bond yield side. So bond yield, I guess, on that very day ended at somewhere around 7.05 or 7.07. During the last year budget, when in last year March, say Feb 2023, I guess the bond yield was about 7.3, 7.4%. So, what government has done, given the confidence to the capital market people that yes, we are there on the path of consolidation of the fiscal deficit. Government announced plan was 5.9% fiscal deficit for FY24, which it was revised to 5.8%, so 10 bips lower on the revised estimate. And the next year target is 5.1, and the year after is about 4.5. So as we are seeing that economy is almost fully recovered from COVID crisis, so we are also marching back towards what fiscal deficit we were having before COVID period. So this will definitely help us on the bond yield side. Other thing which will happen is expected to happen in next few months would be our GSEC will be included in JP Morgan bond index, which is expected to bring in some $50 billion inflow. And there are discussion about our inclusion on the Barclays Bloomberg index also. So that helps in two ways. It reduces the cost of GSEC for our country. It reduces the cost of borrowing for the government, and it also bring in some kind of stability to our currency, which is also very much liked by capital market participant. So there were a lot of things which was mentioned during the budget as what government has done for the country in last 10 years. But I will focus on more on the stuff which are related to capital market, because there is where our focus lies. Other small thing which was mentioned during the budget was extension for the tax benefit which is given to startups and Gift City IFSC, which was expected to end in March 2024. 2024, and it is extended for next year. Then there is some 1 lakh crore kind of startup funding which has been approved. It will be a lower cost or something like interest-free loan which has been given. Then government will fund big time any kind of R&D expenditure from the sunshine sector. So those kind of cheap funding will be provided by the government. So those are few elements which this government outlaid from a capital market, from a business and corporate side. Those were the announcement. Other thing which was important was, as I mentioned, the thrust on capex was very important. So what was outlined within the capex plan? One thing which was very relevant was that revenue capex is increasing only in the low single digit, while the infra capex has been increasing at a faster clip. uh, Roll, raid, uh, those kind of hard infrastructure is about 50% of the capex. As we have seen in last few years, road and rail has been one of the favorite sector for the market. There were some announcement for this sector, and that is one reason why government is so much giving so much emphasis for this logistic, for this hard infrastructure sector. Say logistic or everything which is related to moving goods or people around. The logistic form, say 13 to 13.5% of our GDP. So, and if we compare it to all the developed world, it would be 7.5 to 8%. So our cost of doing business in terms of logistic is about 5-6% higher than the developed world, and that is one reason for our incompetitiveness when it's compared to other countries. Say one reason, one incompetitive factor was our tax rate, but government in 2000, I guess 19, bring down the tax rate for the corporates. Now it is almost on par to the Asian countries. So now, right now, government is trying very hard to bring the logistics sector, the transportation and hard infrastructure, which can be on par to the global level, and hence it can bring down the cost of doing business in the country. So what was announced in this regard was, say government has outlined some 40,000 wagon, which will be converted to the likes of Vande Bharat. Minded, this is not the new wagons for Vande Bharat, but something of the similar category will be upgraded from the existing inventories. 40,000 will be updated. Government announced some four major corridors for railway, which will help the transportation of mineral, energy, cement. So, as I was saying, that the cost of logistic need to be brought down, and hence government is putting a lot of capex in this side, in this sector. Other thing which was mentioned is our track record in terms of laying tracks, railway tracks has increased considerably. Right now, the pace is about what was mentioned on the budget speech is about 15 kilometers per day. The railway capex has been increased from 2.4 lakh crore to 2.55 lakh crore. So again, it reflects the trust the government has on logistics side. Other sector, what we call RTH, road transport and highways. There also, that has got a higher increase. The capex outlay has been increased from 2 lakh crore to 2.58 lakh crore. So something about 29-30% increase has been announced there. Other thing which was the highlight of the budget, apart from infrastructure, I would say, is something towards the energy and more towards the green energy side. Uh, Government has announced about 1 crore household will be going for a rooftop solar, so they can have about 300 units of electricity free of cost. What they were saying is this will bring in saving of about 15 to 18,000 for every household. Why this is so relevant is, think about this. India population is about 135, 140 crore, which will bring to household of 30 crore household in the country. So if we are targeting 1 crore household, so we are covering something about 3 to 4% of India's population through that. And mind it, the rooftop solar works more on when you have horizontal structure. Like if you have a very tall buildings, then it will be only the society infrastructure when can be served by rooftop solar. But on the interior side, the rooftop solar can be a game changer. So that was a plan which has been announced. I guess last year the government has announced about 40 gigawatt which will be going for the rooftop solar, and only about 15% has been executed till now. So there is long runway ahead in terms of increasing rooftop solar capacity. Then there was also announcement of public infrastructure for charging. There's huge thrust on EV. The government is saying there will be incremental orders which will go out for e-buses and e-trucks. So there is a requirement for strengthening of EV ecosystem manufacturing as well as charging. And right now it's actually, from a capital market side, right now it's a very optimum time, because the wafer prices across the world has come down dramatically. So it will help installation of solar plant. Few of the companies which are into solar installation EPC, they will be benefited because of one thing: the demand has been created by the government, so the demand environment is ready. And on the other side, on the if you have the wafer cost which has come down dramatically, so your cost of raw material is also coming down. So that was one important element which was discussed during the budget speech. Other thing, again related to energy, is what government mentioned about OMCs. They have committed about 15,000 crore for OMCs for next year. And mind it, what they committed last year was about 30,000 crore, and government didn't find a need to give that 30,000 crore, because what happened for FY24, the price of the oil, the crude oil came down, and the OMCs companies started to make huge amount of profit. So the requirement of fund didn't came so immediate. Right now, few of the OMCs companies have announced for right issue, so they will need funding, and which will be feed in by the government in terms of this 15,000 crore which has been announced during the budget. Apart from that, all the rural housing scheme, all the rural incentive schemes which was discussed during the budget. One major thing which I remember is was about PM Awas Yojana, where they were talking about 3 crore household which will get a pakka ghar on the countryside. Earlier, the quantum, I guess, was about 2 crore, which has been increased because of the growing demand. So these were the basically key elements and the key sectors which were discussed during the budget. But more important message, what we should take out from this budget was, though this is only a vote on account, that government is very much determined towards the path of fiscal consolidation, fiscal discipline. And say the target was 5.9% fiscal deficit for FY24, and we are overachieving that target. And for next 2 years, we are for by FY26, the plan is to move to 4.5% of fiscal deficit. Why it is very important is, of the total expenditure of the government pie, about 18-20% goes only in terms of serving the debt which we have. Is 17-18% is on the interest side. So a part towards fiscal discipline and consolidation brings the cost of borrowing for the government itself down, which is reflected after the budget speech itself. And for capital market, this is one of the most important factor, because whatever PE multiple we see in the market, it is very much related to the cost of borrowing, the GSEC in the country. So a lower GSEC rate will reflect in terms of re-rating of the multiple for the country. That much, that are the most important thing which were discussed on the budget day. What we can do here is, I'll leave the floor open for any kind of question and answer. Please try to restrain from any kind of specific company related discussion, whether it will benefit single company or not, or whether it can hurt any particular company. But in general, we can discuss about sector, or something on a broader canvas, something on the initiative which government has taken. I will not talk too much about the social initiatives, though they are very important. They help the country to build up capabilities for the long term growth. But we will restrain it to impact the businesses and the industry. So for that, I'm happy to take any question, would be able to answer to the best of my abilities.
Guys, we'll take 2 minutes break. If you have any questions, you can write in comments, and then Ravindra will answer.
Guys, in case you have any question, you can write on the comment box. And in case we don't have any question, since I understand this is only a vote on account budget, so there was very little things which we can discuss from a capital market perspective side. Maybe once the full budget is presented in the month of July, we'll have a very long discussion. But in case you have any question, you can write on the comment box. Else, I think we might want to conclude the session in case there is no question.
So let's conclude this session. Thank you, Ravindra. Actually, it was very invaluable insights. And as we wrap up, let's carry forward this newfound understanding to make informed and financial decisions very easily. To everyone here, thank you for joining us. Let's continue this journey together. Stay informed, stay inspired, and stay empowered. See you all soon in our next informational webinar soon. Until then, stay tuned to Yes Securities for more updates. Thank you.
Thanks, everyone. Thanks for your time.